Good afternoon, my young millionaires. I hope you guys had a great weekend, but we must get into a price prediction video for this week. Expect manipulation, just like we seen on Friday as well. That is not going to come as a shocker to anybody, as the market makers would not allow this thing to close over $23 per share. We know their deal. We know what kind of bad situation they are in. No need to linger on that too much. We need to get a look ahead into what's going to happen next week. We have a lot of key announcements that investors are going to be paying attention to. And I know somebody in the comment section, scroll down, I'm sure you'll see a couple of them that says nothing else matters besides shorts covering. And you're 100% true in the longer term sense of the trade. If these big catalysts move the markets up a lot or down a lot, it's going to affect AMC as well. If you have short-term trades, like I know a lot of people trade short-term options, this is going to affect AMC in one direction or the other. I'll give you guys my take on that into the video. Do what you guys got to do. Hit the like button for me. Consider subscribing to the channel. If you guys want to support the channel and get access to all of our winning trades, check out the link down below in the pinned comment for the buy and sell alerts. It'll take you to Patreon, and then there is a message in there that gives you details on how to join the program. So let's get into it. AMC did close at $22.99 per share. Exactly like we said it would when we started making the video at about 3:30 p.m. on Friday. Said, hey, there's no way they're going to let this thing close over $23 per share because there's 35,000 puts that are in the money at the $23 strike. So unfortunately, they did not let that happen. Down 4 cents in after hours as well. So we did close the day in all at about $22.95 per share. But what do I say to that? Fuck them. It doesn't matter. We're still going to make our attendees in due time for those that are patient. As far as what to expect next week, the actual market moving potential events. You're going to see inflation numbers January 12th. I don't think that's as big of a deal as we already have priced in a high inflation reading for January 12th. So unless this inflation number comes in super high or super low, above or below that expectation, the markets shouldn't move around all too much based off of that. They usually don't unless it's a big upset to the upside or the downside. So I don't expect anything too crazy coming from the inflation readings. After all, it still is for 2021, the last month, so December of 2021. But it does say rising rates and the Federal Reserve could whip stocks around in the week ahead. And that's what's going to be key. Key points. It says big events including testimony from Fed Chairman Jerome Powell Tuesday and inflation reports on consumer and producer prices. That is going to be on Friday. We're going to get those numbers, inflation reports and consumer and producer prices. But the main key thing is going to be the Fed, because the Fed is the key in this environment. Because just to give you guys a brief synopsis on why this is so important, is because the Fed has been buying treasury bonds. They've been buying the 10-year treasury bonds, basically all of them, to keep the yields low, to stimulate the economy. When they buy those, they keep them on their balance sheet, which is now at $8.8 trillion. So that has kept rates really, really low at about 1.7% as far as the 10-year treasury. That's really what your mortgage loans, that's the best loan that you could get. Think about it that way. On a mortgage or a loan or anything else, it's going to be higher than that when you actually do. But that's your base case, your risk-free investment. U.S. Treasury bonds, 10-year, 20, 30, doesn't matter what it is. Now, once they start to sell those bonds, it acts like people selling a dividend stock. If a dividend stock falls, you now get paid a higher interest rate if you want to continue to buy that stock. So it's going to make that 10-year treasury yield go up, and that's going to directly affect interest rates. That's how they affect interest rates, because the federal funds rate, even though that's at pretty much zero, that's only the lending rate between banks, right? That's not determined or has anything to do with what your mortgage, your car loan is going to be, or anything else. So the way they influence that is by buying or selling treasury bonds. And they dropped that bombshell last week that they're going to start selling their balance sheet, potentially the same meeting that they actually raised the federal funds rate. So if that happens, investors are going to start pricing that in, but we have already priced that in because he already announced that, as Fed Jerome Powell does. He likes to give us a heads up. So it's not going to surprise the markets all too much if Fed Jerome Powell comes out and says, yeah, we are going to start doing this. Now, if he says that they are going to unload a set amount per month, say $100 billion or $200 billion per month, depending on that high or low number, that's really what is going to move the marketplace, because that is going to move interest rates. And that is very important because institutional investors like hedge funds, they will short these stocks. They will short your AMCs. They will short your Corsairs, SoFi, DraftKings, all of these stocks that need to raise money into the future that rely on a low interest rate to remain somewhat elevated. They're going to start to short those stocks. In my opinion, do I think they're going to come out and say something dramatically different from what we already expect? Probably not. And it's honestly a stronger possibility, in my opinion, to actually see a rally based off of Fed Jerome Powell and what the markets have already priced in and what he said last week. So that's going to be key as far as, like I said, the interest rate or the interest rates, inflation numbers that come out January 12th as well. So that's basically it. We also do have earnings that start this week for the major banks like JP Morgan Chase, Citigroup, and Wells Fargo. That is also on Friday. And these are the first companies that report are going to be your banks. Every single time, it's always the banks first. So if they start to severely miss their earnings reports, that can also send the markets down, because as interest rates go up, if companies' earnings are still going up, then it kind of cancels itself out in a weird way. If interest rates go up and earnings go down, that's where you start to see some pain. We know, though, AMC is going to have a strong 2022, and that's all that really matters when it comes down to it. But if the markets fall, it's an excuse for hedge funds to short the stock temporarily. But it gets to a certain boiling point, like we have called out in yesterday's videos, that essentially once that liquidity is at the very bottom and we get an announcement, a catalyst that moves the fundamental needle to the upside in AMC's favor, that's when you see short squeezes. That's why so many stocks were going through short squeezes in 2008 in October, because that was the bottom of the markets and liquidity had all but dried up. So that's the scoop in a nutshell. Hopefully you guys just learned something there. I think I made myself smarter by spieling on about that. but let's dive into a little bit of the technicals and really what you guys need to know. So something very interesting happened. If you guys have already seen me talk about this, feel free to skip ahead for a second, but we did hit that low December 14th at $20.80 per share. We hit the same exact low as well on Friday, $20.80 per share. So the algorithms are kicking in and buying the stock at $20.80 per share. And this is a double bottom. This is a textbook double bottom, literally the same exact bottom. And that is a technical indicator for a bullish reversal. So if this indicator is correct, we should see a reversal. And if history repeats itself like it should, right? December 14th, we rallied about $12 from the bottom to the top in about a week's time, a little bit over a week. So that could be good. Watch for that. Watch for the bounce to the upside. But overall, I do think it's going to be a somewhat muted week, just because of the back and forth catalyst we're going to be getting. So much information is going to come so fast, and it's going to be hard to process this. But if, things go in the right direction, we could see a big move to the upside. If things start to come in bad, especially earnings at the big banks are bad, then I would expect that move back down to about $20 per share. That's a $10 drop or a 10% drop from where we are currently at right now. So I don't think it's going to happen, but keep in mind it could happen. Now the 20-day simple moving average, that's the first level that we really have to break out above, and that is sitting right here at about this neckline, right? That's the support levels between the two shoulders right here in the inverse head and shoulders pattern. And that's sitting at about $26.57 per share. So if we can make a move above that, that's where you're going to get some steam and momentum to the upside. And ultimately, I also do want to see us break above $29 per share. And then that 200-day moving average is at $33.33 per share as well. MACD is bearish. Is what it is. Nothing more to say about that, to be honest with you guys. And as far as my price prediction, if I were to go out on a limb here, I would say that in between $25 and $26.50 would be a reasonable level to end the week. because I do think you're going to see a lot of resistance or a lot of shorting pressure come in at this 20-day simple moving average, as we have seen throughout this whole time. It's pretty obvious the resistance, the strong resistance that is here at the 20-day moving average. Just take a look at my cursor. It's literally following it to a T. So we do get a break above that in a substantial way. That's going to be incredibly bullish. But that's my price target in between 25 and 26.50 per share. To the downside, about $20 would be my price target if things start to go bad and we get bad inflation data. Fed Jerome Powell is overly hawkish, and the bank earnings are also bad. So that is what to expect. As far as the Ortex data, we are looking at 17.43% short interest of free float, 89.48 million shares that are sold short. Cost to borrow, all of that pretty much staying the same. Share utilization, also pretty much staying the same at 75.58%. Days to cover at 2.45. So still, like I say all the time, might as well just put a bomb right here because it's a ticking time bomb still. And we're just waiting for that to actually do something, right? The days to cover to go down and the stock price to go up. Now, as far as the stock tracker data, if we do see a bullish reaction to the upside, we have very few calls that are in the money and 63,000 that are out of the money. So if we do see that move to the upside, especially Thursday and Friday, we can see another mega bounce scenario start to play out. I wouldn't bag on it. Like I said, I wouldn't die on a hill for it, but it is possible. You also do see about 22,000 puts that are in the money and about 28,500 puts that are out of the money. And then ultimately the week after that, you're looking at that big expiration day, January 21st. So keep that in mind. Going to be very important, as well as the max pain is $24 per share. So my price targets in between 25 and 26.50 by the end of the week to the upside is almost where the max pain is at $24 per share. Give or take, $1.50. It doesn't matter. And in the grand scope of the trade, this information really doesn't matter as well. I do, for all transparency sakes, have one $35 January 14th call. I figured we were going to get the breakout. It looked beautiful. Did not happen. So I'm down about $80 right now. So take it for what it is. If that sends you any signal, if you want to gamble with AMC options, not recommended whatsoever, but put an amount you're willing to risk and willing to lose the whole thing. Certainly don't put in an amount of money you're trying to sell out and do this, and just don't do it. Treat it like a lottery ticket. So that's basically going to be all for this video. If you guys found value out of it, hit the like button for me. Consider subscribing to the channel and let me know down below in the comment section, what do you guys think about this information? What is your price targets? Baby, I hope you guys had a great weekend, and I will see you in the next video.